Some really incredible stock market news has been happening as of recent. Whether you're a short-term investor, long-term investor, or thinking about entering the stock market and perhaps you're not involved right now, paying attention to GameStop's stock price is really important right now. It really illustrates the fact that the stock market at times can be very unpredictable, and on top of that, the true power of a group of individuals or people on the internet gathering together, and that movement can actually create such a strong impact on the stock market that it can actually rally the stock price. If you aren't aware of what's happening with GameStop as far as a business, it's been suffering over the past few years and its stock price has never really done too well. Yet 6 months ago, the stock price was only $4, but yet it's jumped up almost all the way to $100 and at times even pushing up close to $150. So that's almost 25 times where it started off 6 months ago. The huge jump in stock price has caused short sellers, which are people that are betting against the stock price, to lose over $3.3 billion, and in Friday alone, losing $1.6 billion in a single day. Before diving in further, I want to give a few more stats that really illustrates how incredible what's happening with GameStop's stock price right now. Its stock has historically fallen year over year for the past 6 years. It isn't expected to make a profit till 2023, and that it has more stocks that are being shorted or sold that are in existence. More on that later. And to top it all off, its stock price went from $76 per share to almost $150 at its peak, and then dropping almost to close to $60 per share, and then closing at around $80 per share. So why has the stock price been so volatile? And on top of that, why is the stock price seeing these huge increases as of late? There are two main reasons. One has to do with what's known as a short squeeze, which we'll cover more in a bit, and the second has to do with a heavy level of optimism, and combine that with the fact that on Reddit, a subreddit known as Wall Street Bets, a lot of people have a healthy amount of optimism built around GameStop's stock price. GameStop added a few people to their board, including Chewy co-founder Ryan Cohen to their board, and he took about a 12% stake on their company, so a lot of people are optimistic about that news. This news combined with the fact that people on the subreddit Wall Street Bets, which are people that are known to take an extraordinary amount of risk involved in the stock market. What also comes with that huge amount of risk also is that huge potential on the upside to have huge gains. There was also added attention because huge institutional investors such as Andrew Left of Citron Research have shorted or betted against the stock price, and that basically has led to some name calling. Classic Wall Street investors believing the price should go down, and regular day traders or Wall Street Bets believing that they're completely wrong. So you think about it from these day traders' perspective, basically it's a win-win type situation if the stock price goes up. Not only do they have the huge potential to make a lot of money in the short run, but on top of that, they basically are sticking it to the man or sticking it to these institutional investors or these people that are known to be on Wall Street. And let me just say, the power of sticking it to the man is an extreme motivator, but even more so than that, you can kind of look at this as a high stakes game of chicken. So going back to this idea of a short squeeze and how is that relevant to the story? Well, the first thing you have to know is about what's shorting a stock, which is basically betting against the stock price, hoping that it's going to go down. And when you buy into a stock, when you're buying a, let's say, Apple stock, you're essentially making a bet that the stock price is going to go up. The way short selling can kind of work, and this is just to kind of simplify the process, is you're basically borrowing someone else's stock, selling it at the current price, hopefully a high price, and then later on paying them back at that future lower price. To kind of give an analogy, let's pretend that you have a friend that decides to borrow your car for the next upcoming year, and they decide to go ahead and sell that car right now for $20,000. Obviously, they're not too good of a friend if they're selling your borrowed car. But let's say that after a year that car is now valued at, say, $15,000. So when they go to return the car to you and you're asking for your borrowed car back, they decide to mention to you that they already sold the car, but since the car is only worth $15,000 now, they're willing to pay you, say, $16,000. So it's a win situation for you, and they end up walking away with $4,000 of profit because they sold that car at that higher price when they borrowed it at $20,000, and they eventually bought it back from you at that lower price. And like I said, this is just an analogy. Obviously, all analogies eventually break down at some point. But the opposite can obviously happen as well. Let's say that person that borrowed that car sold it for $20,000, and let's say it was a collector's car, and then after a year that car was actually worth, let's say, $30,000, and I ask for them to return the car and they say they already sold it. Well, now they're going to owe me a lot more money. The same situation can happen when you short a stock though. facto. The stock price can go up higher and higher when you're making this bet hoping it's going to go lower, and it goes higher and higher, and then you end up losing more and more money. But what's important to understand here is that the stock price can actually go high enough that you may not necessarily have the money or cash on hand to be able to cover that loss. So going back to that car analogy, let's say I sold that car for $20,000, and so I would owe $20,000 back to that friend that I borrowed that car from. But let's say that that car's value goes up and skyrockets to $100,000. Well, I may not necessarily have $80,000 to cover that difference, in which case I'm probably not going to be friends with that person anymore. So this is what would be called what's known as a short squeeze, which is where the stock price or asset jumps up in value so much that my bet that the stock price would fall makes me have to give up on that bet by buying the stock to avoid losing more money. But that last part is really important to understand. So the only way for me to avoid losing more money is to buy the stock price, and by buying that stock price, it only pushes up that price even further. Therefore, those people that place bets against the stock price only end up losing more money. And this is exactly what's happening to Citron Research. And to kind of add insult to injury, what in theory could happen is that the stock price could jump up enough that Citron Research basically has to give up on its bet that the stock price is going to go down. And once it goes high enough, it basically gives up and no longer is involved with GameStop's stock price. And then that stock price can actually jump back down, and therefore Citron Research doesn't end up profiting from the fact that GameStop stock's price actually went down. To add to all of this complexity, and once again, I'm just simplifying here, but basically short sellers have shorted the stock or basically sold borrowed stocks more than the actual outstanding or available stocks. So to kind of simplify this explanation, let's say that GameStop only has 1,000 shares, and I end up borrowing those 1,000 shares and selling it. Well, I sold those stocks to somebody, and that person can end up loaning out that 1,000 to somebody else who is borrowing it and once again sells it. And so that's 2,000 shares that were borrowed and sold, but it's only done with this 1,000 shares. So do I think GameStop's stock price can continue to rally as much as it has been, or do I think the price is ultimately going to dwindle back down? I think at the end of the day, if I could 100% accurately predict the market, I'd be 100% in on GameStop one way or another. The reality is I'm of the belief that nobody can predict 100% accuracy what's going to happen to GameStop's stock price. I've worked a number of years as a financial analyst, so I rely on data, trends, and statistics. But with that being said, you always have to be prepared for the unexpected. And the same is absolutely true when it comes to the stock market. You cannot accurately predict one way or another. So if you're convinced by institutional investors that GameStop has to drop in price, there is no certainty. It does not have to drop in price. Or the other way, if people are saying that they're going to ride, GameStop's stock price to the moon and that's an absolute certainty, don't buy that. Don't buy into that certainty, because that's when you get burned the most. The whole reason I want to talk about this story is, one, to talk about that level of uncertainty that nobody could have accurately predicted what was going to happen with GameStop. And on top of that, no one can accurately predict what's going to happen in the next upcoming months. On top of that, the second reason I bring this up is just to kind of illustrate the power of mob mentality, or the power of these internet forums talking about different stock prices. When it comes to people talking about their stock picks, whether it be on Twitter or Reddit, or just even online, just seeing what's trending on Robinhood and going with that as an investment opportunity, I think a lot of people heavily discounted that in the past years. But I think what's happening more and more, it's becoming clear that the power of Robinhood investors, day traders, and people on internet forums talking about their stock picks and their recommendations, that power is something to be watching. As far as GameStop's future, I'm a little bit more pessimistic, because I remember the days that you would go over to a friend's house and they would have a whole shelf or bookcase filled with CDs of their different games that they have. And I used to be always envious and jealous of that, because they had way more games than I had. But nowadays, you go over to a friend's house, they could have 100 games, but it's all digitally downloaded. And so you no longer have to go to a physical store to buy a physical copy of that. And on top of that, more importantly, you're not selling that to GameStop, and that reselling business is not necessarily as prevalent. I like to think about this from the game manufacturer's standpoint. If people are going to be selling digital copies and GameStop is profiting off of selling these digital copies, why not just push it on their own platform? You go on Nintendo or for Xbox or PlayStation, you go on their homepage on your own gaming system, and it basically seems like it's a whole ad screen of just them pushing their gaming system platforms, or the fact that you can go to their e-store and buy digital copies or buy expansion packs. And it makes a lot of sense because at the end of the day, there's a lot less logistics involved in selling you that digital copy, and a lot more profit involved. On top of that, the other benefit from a game manufacturer standpoint is the fact that they can sell digital copies to multiple people, versus a physical copy, you could actually loan that game to a friend. But now if my friend bought a digital copy and I want to borrow their game, I can't do that. I have to buy the digital copy myself. And sure, GameStop already has this e-commerce platform that people are familiar with. People like buying digital copies from GameStop, but I think you always have to ask this question of, not only will game manufacturers have an incentive to basically push their digital copies on Nintendo and buy direct through them, but I also think there's this question of, is there an opportunity for a new potential competitor to enter the market and completely sweep GameStop across the board? You think about a company like Blockbuster, obviously they had the audience and available base to basically push an online streaming platform, but obviously Netflix came in and swept them. Obviously the difference in this story is the fact that Blockbuster was really resistant to online streaming. They didn't necessarily want to capitalize on that market. I do like to think if Blockbuster had adopted online streaming and heavily pushed that to their audience base, would it still have been a successful company and viable? I actually am a little bit pessimistic on that, because I think Blockbuster would have probably tried to do both. They probably still would have tried to maintain their retail stores because that's what they're familiar with, while also pushing this online platform. And I kind of see that same strategy happening for GameStop. I kind of see them still trying to focus on keeping a few retail stores, but I think at the end of the day, if they're going to try to push online, that's where they should go. And I think at the end of the day, what's going to happen is Nintendo, PlayStation, all of them are going to push their own platforms a lot more readily and a lot more quickly than, say, GameStop would. So I think at the end of the day, it's basically a long-term lose situation for GameStop. At the end of the day, I'm just giving my personal thoughts on this, but I do want people to be overly cautious when it comes to any stock pick that is, making headlines that people are talking about, because that's basically a recipe for a lot of volatility and a lot of lost money. I don't normally talk about stock picks, but I did want in general to talk about the story just because I found it interesting. If you do like personal finance or me talking about these types of videos, please hit that like button so I know to make future videos on it. Or if you like car buying type advice videos or home type buying advice videos, or just personal finance in general, consider subscribing to the channel. Those are topics I really enjoy talking about. And as always, I hope to see you in the next one.